Sometimes the simplest questions are actually the hardest to answer. My name is Drew Cohen, and I used to work at Goldman Sachs, as well as another large investment fund called Capital Group. Now I run my own investment research company called Speedwell Research, and I've looked at hundreds of different stocks. And the question I got was, how do you think like a business operator? Now, this is an important question because, as Warren Buffett would say, the best investors think like business people, and the best business people think like investors. And so if you want to understand how to really invest for the long term, it's synonymous with understanding how to run a business for the long term. A lot of times when you are invested in a company, you want to partner with managers who are making these sort of long-term decisions. And so the question was, how do you think like a business operator, in hopes that that will help him become a better investor? And I think it will, but it is not an easy question to answer, because I want to answer it by saying you have to think from first principles. But what that basically means is you have to think for yourself, which is not me trying to be cavalier. It's just that a lot of these business people, they do problem solve for themselves. But the key thing is that they are problem solving in a way that is consistent with the sort of long-term value prop of the business. And so every business has a value prop or a value proposition. That is, what are they offering to the consumers? Now, you can think about this as anytime you buy anything, you have a variety of different preferences. Let's say that you are hungry for lunch. Okay, your preferences may be, I want something that's quick. I want something that's, not that expensive. I'm okay spending more money than, what fast food costs, but not looking for like a sit down lunch, some price in between. I want it to be healthy. I also maybe am, not in the mood for salad, so something else. And I also need some protein. I only have 45 minutes, so I got to get it done in 45 minutes. And so all of these are sort of different preferences that you have. Now, a business will come out and create a value prop, which is to address all of these different preferences. And if they address enough of a consumer's preferences, then they will have a sale. And so at Speedwell Research, I kind of coined this term of the consumer's hierarchy of preferences, which is basically the idea I just said. A consumer has a variety of different preferences. Once you fulfill a sufficient number of them, you get a sale. If you fulfill any preferences beyond where you would have otherwise still gotten the sale, then that means you are building consumer surplus. Now, I'm going to pick back up on the consumer surplus idea at another time. The point I want to make here right now is that a good business fulfills a lot of consumer preferences. And so if you're thinking about how to be a better business operator, you want to think from the perspective of what is going to fulfill the most amount of my consumer preferences, and do so in a way that is sustainable for the long term. Now, that's important because businesses can make decisions in the short term that maybe kind of work out for a little while, but then come back to bite them in the long term. A very common sort of an example could be a company that is growing very quickly and they never really invest in their back-end systems to keep up and sustain a lot of growth. Instead, they're kind of doing these, quick patchwork things to just kind of continue to get by. And one example is MySpace, who never correctly built basically how they should structure all of their data, the profiles and all that. And so instead of taking the time it would take to fix what is called tech debt and make that work sustainably and scale for a much larger company, they did all these quick, patchwork things like making everyone's first friend Tom, instead of re-architecting the database to figure out who should be able to see whose profile. Because the idea of MySpace was that you could only see a profile if you had a shared friend. And so instead of working the database and investing in it, that would allow people to only see the right profiles they're allowed to see, they just made Tom everyone's friend to kind of skirt that sort of issue. All of this sort of caught up to them over time, though, as Facebook continued to advance and they rolled out more complex things like the newsfeed. All of this just weighed them down and they weren't able to innovate. That is an example of a business manager making short-term decisions to get by instead of saying, let's pause all sorts of new introductions of new features and let's get this kind of foundation built and proper for growth. One entrepreneur I think everyone can learn from is Willis Johnson. He is someone who founded a company called Copart. If you don't know, I actually also have a podcast where we do really in-depth episodes on specific companies, and I could link to our in-depth episode on Copart below because it will tell you a lot about how he built the business and allow you to get a sense of how to think like an entrepreneur. A lot of times understanding what it's like to be a good business operator is just learning from good business business operators. And so he started working in actual junkyards. He would buy junk cars, take them apart, and sell them for parts. He learned many things early on that many people may try to teach you in business school class, but he just had this sort of intuition of what people wanted. And so one thing he did early on was, even though these are salvaged vehicles that people are buying and broken parts, he decided to clean all of the parts and nicely organize them in his junkyard. And so people may not think that if you're going to a junkyard, you expect it to look a little cleaner and organized, but he found that his sales actually increased if he did that. And that is an example of kind of thinking about what does the consumer want and just giving it to them. It's not a hard thing to think about, I should clean the things that I'm selling, but people just weren't doing that. And so that goes back to thinking for themselves and thinking, how do I fill consumer preferences? And so check out that podcast link below, but you could learn a lot more about him and Copart. But a lot of times, again, a good operator is someone who's just thinking about what does the customer want? Steve Jobs is sort of famous for just modeling the iPhone after what he wanted in a phone. He never had controlled study groups tell him what features they want in the phone. He was just able to intuit things that he wanted in a product and then create them for customers. Now, it is also sometimes a little bit of a feedback loop where a good business person tries something, you see how the market responds to it, and then you can adapt it. The Apple Watch, for instance, when it first came out, didn't really have a clear use case. And then over time, they figured out that a lot of people want to use it for sort of health and fitness functionality. And so they leaned into that, and it made it a much more useful device for people. Sometimes, though, the entrepreneur just has a good sense of what people want. Steve Ellis, who created Chipotle, was able to figure out that people want fast food, but it to be of high quality ingredients and not that expensive. And so his original burrito store was an absolute success just because he was fulfilling all of these preferences correctly. Over time, though, it turned out that this original Chipotle concept was also missing some things that people wanted. And they later were able to introduce a lot of kind of digital elements so you could order ahead of time. And the other thing that's important to note is consumer preferences can evolve over time. If you think of Starbucks, for example, when it started, no one was ordering on their mobile phones, but now it is a significant portion of all sales. So much so that they have to have a separate sort of production line just for mobile ordering. And so that is an example of a business person understanding how markets are evolving and kind of reformatting, restructuring the business to kind of meet those needs. And so how do you think like a business person? Well, you basically have to think, what does the customer want, and work backwards from there. You should not be thinking from the perspective of how do I make money? That is an awful way for any business person to think. Instead, what you do is you figure out, what does the customer want? How do I provide that? And when you provide that value to someone, the end product is almost always going to be profits. And this isn't just me saying this. This is many of the world's greatest entrepreneurs have said similar things. Jeff Bezos never talked about profitability of Amazon. He talked about how do we have the most selection, the fastest delivery, and the lowest prices. He knew that if he was able to deliver that with Amazon, eventually they would become profitable. And that was very true. It took many, many years, but the idea is that once you provide value, eventually you're going to be able to monetize that. In contrast, a bad manager is someone who's overly focused on financial metrics. Someone who's very concerned about how do we increase margins instead of how do we provide more value to customers. Now, there's a little bit of a pull and take where you don't want a manager who's never focused on financials whatsoever, but the primary focus should always be on providing a good experience. Now, it does tend to be the case that the first entrepreneur, the one that sort of creates a company, is very focused on providing the most value. And then sort of the second line in manager is someone with a little less vision and is someone who's more focused on monetizing that. Amazon talks about why it's always day one, and that's because day one means they're constantly innovating, they're constantly providing value. Day two is they get lazy and they're focusing more on just monetizing their existing product. You could argue that it's kind of a little bit like day two at Amazon now, where now they're making their product a little bit worse with a lot of sponsored ads in it, for example, or adding advertising to Prime Video. Not that these are unfair trade-offs for a business to make, but the focus is now becoming on monetization. And I'm not saying that that's bad. I'm just saying that you want a business to kind of balance between these two. And it tends to be the case that the first entrepreneur provides the most value. That is what they're focused on. We see that with Steve Jobs, very focused on creating the best products. Whereas Tim Cook, in contrast, was very focused on operational supply chain management and sort of monetizing their existing products. Yes, they innovated, but you can't really say that that's done too much for them over Tim Cook's era relative to Steve Jobs. And so in conclusion, all of that is to say a good business operator focuses on the customers. And if you want to learn more about how to think like a business operator, you should read and learn directly from business people. Think about how they're running their business. And I have a lot of resources for you in these company podcasts we have, which you could check out the link to the Copart episode below. But you should read broadly. You should read as many books you can on entrepreneurs and really try to understand the history of them. And I actually also do have a newsletter that's free where I do sometimes release the business history sections of our research report, which will help you understand how entrepreneurs think. And so I'll link both of those in the show notes below. And if you want to continue on this journey to learn more about how to think like a business operator, make sure you hit subscribe. And if you have any questions, go ahead and drop them in the comments below.